Is the European debt crisis finally starting to take its toll on McDonald's of all places? Perhaps. McDonald's reporting same-store sales for the month of February on Thursday morning, and an interesting trend developed. In the U.S., sales were up dramatically, 11%, which is just great. Obviously, it shows that people are still going to places like McDonald's, convenience, the value, what have you. Maybe Lent helping as well. I love that the filet of fish gets its moment in the sun after Ash Wednesday. But in Europe, same-store sales only up about 4%. That was a little bit below estimates. Total sales worldwide up 7.5%, also below estimates. And here was a bit of a shocker. Asia Pacific, Africa, and Middle East, sales there only up about 2.4%. And that is definitely a bit surprising. Obviously, there's been a lot of hopes that emerging markets will continue to drive the global economic train, but we are seeing some signs of a slowdown in China, perhaps other parts of Asia as well. It's not all bad news, though, for consumers. Another consumer staples company, Anheuser-Busch, reporting earnings that were much better than expected in its most recent quarter, and it specifically cited market share and earnings gains in the U.S., in Brazil, hot emerging market, even though it's cooling off a little bit, and even Western Europe. So maybe all those ads on the Super Bowl paid off for Anheuser-Busch, and that was a reason why it outperformed McDonald's. But consumer stocks like this, obviously very important. Investors should keep an eye on them. It does help give us a little bit of a read for consumer discretionary spending.